The US stock market has hit a pause. After 2 weeks of strong gains, both the S&P 500 and Nasdaq 100 closed slightly lower, and the charts are now flashing signs of indecision. So the market is gearing up for a breakout, or we are headed for a bigger pullback. Let's find out. Let us start with the market recap and technical candle insights. For the week ended on 9th May 2025, S&P 500 was down by 0.47% and Nasdaq 100 slipped by 0.2%. While these moves were very minor, what's interesting is spinning top candlestick pattern formation on both the indices, especially quite in proximity of 21-week exponential moving average. This pattern reflects market indecision, which often comes before a major move either ways. We are now seeing S&P 500 inching back towards simple moving average 125, a level that has previously acted as a resistance and may again play a role in capping the further upside move. Momentum is slowing and the traders are watching for a directional cues. Now let's talk about the market sentiment. The fear and greed index has moved up to 62, which is clearly in the greed zone. Just a week ago, it was reading 54. It was in a neutral range. So the sentiment is warming up quite fast. However, there is a contradiction. The put-call ratio, 5-day average, sits at 0.73, which leans towards the caution. That means, despite the greed rising on the surface, option traders are still hedging their bets. Now let us look at the volatility and yield spread observations. Volatility continues to ease. The VIX is now comfortably trading below its 20-day moving average, signaling lower fear levels across the board. Meanwhile, the 10-year minus 2-year bond yield spreads stands at plus 0.49, which is normal yield curve, suggesting the bond market is no longer pricing in a recession in near term. That's a subtle but positive macro signal. Short-term risk appetite seems to be returning. Now a quick word on Fed. On 7th May 2025, the Federal Reserve decided to keep interest rates unchanged. The FOMC cited steady progress on inflation control and stable labor market conditions. This aligns with the market's base case, but the Fed also signaled it's not a rush to cut interest rate either, making upcoming inflation data all more critical and important. So with all this, spinning tops on weekly chart, conflicting sentiment signals, and the cautious Fed, what's the market trying to tell us? Let us now head towards the chart for a closer look at key support and resistance zones on S&P 500 and Nasdaq 100 that could guide us for the upcoming week. This is the monthly price chart of S&P 500. Why we are looking at the monthly price chart? To understand the historical price action. What we can see here is whenever there is a correction, even in the bear market, the price has taken support at EMA 55. It has done it in 2022 and it has done it here in 2020 bear market during the COVID time. Now again the recent time correction, it extended to more than 20% even now. So it has taken a support in the last month and there is a formation of a pin bar kind of formation indicating the pierce through action over there. The most important part is it has a very large shadow to refer to the candlestick of April 2025. But the most important part is if I draw a horizontal line over here, this was the rounding bottom pattern and it gave a breakout over here. So during this correction, this neckline, which held very strong as a support, and ultimately the bounce back is from that critical level. So it is giving a multiple support level from where S&P 500 is bouncing. If I superimpose some of the technical studies, look at this trend line. Price has taken support here, price has taken support here, price has taken support here, price has taken support here. So it has a multiple touch points. So the confluence we got is the neckline of the rounding bottom pattern, the trend line, which is a rising trend line acting as a dynamic support, and EMA 21, which is acting as a support. It acted here too during this correction. Let us now move to the weekly price chart. It has taken out this important area of resistance and now trading above it. Now trading in fact above EMA 55 as well. So if I do the retracement analysis of the corrective wave, the recent correction wave is this. The most important thing to observe is now it is trading above 61.8% retracement level, which is a golden ratio with respect to this corrective wave. Now let us go to the daily price chart. Now, what is the support and resistance area which market might respect in the forthcoming week? This trend line is acting as an immediate resistance that we discussed in the last week also. There is a multiple resistance level, SMA 233, SMA 200, SMA 144, all will act as a resistance area. But what I see on the price chart is this important support area, and this is the resistance area. So 5,782 to 5,827 is the supply band in this. Of course, some minor resistance is there over here, but that is not very significant in terms of the price action. Now, there is an existence of a gap over here. So very solid support exists at around 5,300 level because the gap exists at 5,309 level. What is the intermittent support? If you look at this area, this is the area of resistance and this is the area of support. So 5,500 to 5,569 is the intermittent support where we have an advantage of dynamic support like EMA 21 and EMA 55. Now this is the monthly price chart of Nasdaq 100. Now if I draw a horizontal line over here, so this was the breakout of a rounding bottom pattern. So the price corrected and took support at the neckline area. Last month candle, it has a very large lower shadow. There is a pierce through action with respect to EMA 21. So very important bounce back even in this index. If I do the retracement analysis of this corrective wave, what we can see, even Nasdaq 100 is trading above the golden ratio, which is 61.8% retracement level. So there is a strong bounce back even in Nasdaq 100. Let us go to the weekly price chart. This is the area of support. This is the area of resistance. Price has already taken out this and now it is trading in the weekly chart above EMA 21. Where could be the support in the forthcoming week? Intermittent support is very strong over here because there is a EMA 55 also over here and there is a confluence of golden ratio which it has already given a breakout. That means it will act as a support. So 19,400 to 19,600 is the immediate demand area. Where could be the potential resistance on upside move? So 78.6% retracement level falls at something around 20,820 level. So this area is an important support area. And if I draw a horizontal line, this is nothing but the multiple top formation. And this is a neckline of multiple top formation. This area will act as a resistance, which is coinciding with 78.6% retracement level. So 20,850 to 21,000 is an important supply zone in Nasdaq 100. And if we look at the daily price chart, this area will act as a good support that we have marked in the weekly price chart because there is an existence of EMA 21 and EMA 55, which might provide as a dynamic support to Nasdaq. As we have seen on the charts, both S&P 500 and Nasdaq 100 are holding above their 61.8% retracement level, rebounding from multiple supports, including trend lines, moving averages, and neckline of the prior rounding bottom pattern. These confluences suggest the bull run may continue in coming weeks. But what do you think? Is this a real continuation or just a temporary bounce? Share your views in the comment section of this video. Let us discuss. See you in the next video.